Okay, everybody, let's get going today. Big Thursday. Thank you, Mad Caps. Let's get it. All right. How's everybody doing today? Quick shout out on the chat. How's everyone holding in after an eventful 24-48 hours? We'll take a look. Start with crypto today. Bitcoin, the obvious. Get into stuff like S&P 500, which actually came back, reversed exactly off the hop today at 41.10. Looks like a little relief rally ensuing right now. Absolutely, Snipes. Great comment. I don't. I think we're all. I think we all understand what's going on right now. Absolutely. Look, this is the geopolitical event that you are pretty typical for market declines. You know, get a lot of noise. But we are down here at a type 2 on the S&P 500 on the daily. There's futures. Crude oil well above 100. Brent's above 100, and then light sweet crude is essentially 99. We'll get into that. Crypto, folks, listen. I think as long as the market narrative is going to continue lower, it's going to pressure crypto across the board. And we had talked about this this bat pattern since last week down to target 2. That was our type 1 maximum reaction. We got a deep crab pattern that almost essentially overlapped target 2, and we're failing. And I mentioned this last week. The fact that this is not really giving too many reactions, and we hit the hop level, and it's another dud bullish pattern following a bearish pattern. What's going on? Hey, shout out to Mitch Ray in the chat. Hey, Mitch, how are you? Are we going to do something tonight? I mean, it's kind of like emergency meeting, right? I think maybe, if not tonight, next week for sure. Look, this is not going to go away anytime soon. So I really think that it's the larger possibilities that we've addressed for a while are playing out in ideal fashion. I just keep coming back to the whole thought of a year ago saying that it was a beautiful environment for speculation to the upside. But I didn't really think that that was something we had to consider was abnormally good. Now we're abnormally bad to the downside. And listen, the thing with Bitcoin and a lot of these with the larger structures in the face of what we're dealing with currently is, I think, not constructive. You want to jump on this stream? Yeah, sure. I give me a couple minutes. Let me do an update. I'll ding you on the Discord. I thought you were saying have me come on yours tonight. Give me a couple minutes. I'll pop Mitch. Say all right. Give me a couple minutes for sure. So all right, we're gonna get Mitch on here in a couple minutes. Excellent. Thank you. Listen, the whole conclusion is that the downtrend continues. The larger patterns that we've addressed for a while look like they all need to get retested. Are we going to not just face facts? That's how I really feel about the scenarios we've been entertaining for a while. Let me bring that pattern back up really quick. If you folks have not gotten with the new harmonic pattern collection with the combo indicator for TradingView, please get with either a free trial, or if you are already purchased the program, your update should be available in the invite only, and you want to replace your M&W modules with your combo scanner and put 3 of them in. We want small, medium, small, regular, and large to get all the maximum pattern scans. I talked about that last session. Do be aware of that. The larger levels that we have been considering that need to be retested, I think serve as a minimum bad scenario. I think it's absolutely, you're looking for downside numbers. Take a look at some of the bigger patterns we've mentioned where they need to be retested. This recent updated version of the PineScript 5, folks, that we did and just came out with, did give us more pattern matches. Some of the ones where we were looking for, they matched up the pattern alignments, but we weren't getting them. Now we're getting them, which is nice. And they show us the proper levels, and actually for right now for Bitcoin, we have discussed the 2 big patterns, the back-to-back patterns. And I want to highlight this XA level on the 886 as probably the most critical and needs to be retested, and we'll favor that as our minimum level. If it hits that and slides down to the hop at 22.5, so be it. Appreciate it. That would complete the bat pattern, but again, these are minimums, and I still going to favor that. And then my whole theory of looking for altcoin reactions if Bitcoin could go sideways to up, has failed. And I don't want to screw around with that anymore. I really think that that's been something where, yeah, you saw some reactions and then they all rolled over. Quickly, let's look at the poster child of all altcoins, Cardano. It hit the hop level at 72 cents. We talked about that. Depending on your data feed. Let me bring this up. Here we go. 73, 74. On Binance, what was that low? The Binance low, remember, we talked about this on Tuesday, 73 area, 74.50 on Binance. I mean, we're talking within a penny of the hop, which was our target. Yeah, 74 on the Bitfinex, 74.50. Yeah, really amazing that that felt just that close. Hop was 73.25. Looks like our pretty much our consensus low was 74.50. Now, if I'm, it's not the, it's an ugly pattern by all means, and I've been talking about this. Why the failure of it is just shows us what the extent of what's happening. So quickly, let's look at total crypto market cap. And then, Mitch, I'm going to get you in here in 2 minutes, okay? Because I wanted to just highlight one or two of these huge patterns that software is spitting out, but we need to understand that below these levels in the market and crypto across the board, you're going to have to then maybe just throw it all in the towel on crypto and everything until it does another 2017, 2018 winter. And we're seeing it. You're violating patterns, last chance patterns. And so in that scenario, that's the total crypto market cap. So just put this number in your head: 1.35. Anything under 1.35 trillion on crypto market cap, you're in big trouble. And then again, the DeFi crypto market cap. We do have this butterfly. I mean, there's a couple of pending patterns down here, but I think 100 billion as a safe round number. That you violate that, you find yourself at 96, 95, 94 billion. This will then likely do the full reset back to recent lows, July lows of 60, 65 billion. I mean, you haven't retested that, even that 886 on total DeFi, but it's there. Quickly, I want to jump over to, let's look at S&P for this morning. Okay, 4110, folks. 4110 was, I want to highlight Nasdaq and S&P, and then Mitch, I'm going to bring you on. I'll call you on Discord in a second. Here's, I posted this morning, and I just want everyone to utilize these patterns and this shark pattern on S&P as simply a reaction. Maybe we do a pause rally up here and then have some kind of continuation later. Clearly, you fail the hop level on that. After this little bounce, I think we could bounce a little bit, but there's nothing under 4110. I want everyone to realize that the larger problems take shape under 4100 for the S&P. And this is where I'm going to bring Mitch in, because this is where then we get into thinking how far. What's crypto going to do? Will crypto evaporate in light of everything? You're shaping up to essentially under these lows, and the current patterns that we're dealing with is I think 30K is pretty easy. I still want to come back to that capitulation scenario I've been referencing that follows what happened in 2018. Let me bring the man on. Let me go over it really quick, folks. For those that are new, welcome. And please join us over at harmonictrader.com. Become a basic member just simply by registering on the homepage. And then all of the resources for the software, the books can be accessed at each of the links. Go through the webinars and join us. We are here every Monday, Tuesday, and Thursday at around 11:30. Subscribe on the YouTube channel to get the notifications, and then join the group on Discord. Click that link and come on in, and this is where I'm going to dial Mitch up. And join us there. We've got a lot of people posting charts, harmonic patterns. We do all harmonic patterns here. So that's our focus exclusively, and the other strategies, confirmation strategies, indicator strategies that we use. Really quick, let me find something here. Let me get these guys. I'll bring Mitch in. The other thing that I'll highlight here, let's go to the Bitcoin futures chart too, because we'll start with Bitcoin futures, because this is the other fairly reliable framework, fairly reliable set of patterns, same as we've seen on the TradingView platform. I think this is a bit clearer, and we can walk through this. I like that. Carnage with Carney. Yeah, that's what I should have titled today's session. But we have been talking about these scenarios, folks. It's not like this isn't foreign to us on Bitcoin, Nasdaq, all of these. It's been absolutely, frustrating, but I think it's it's just starting to come together. Where did I? Hold on. Let me get him on here. All right. All right, Mitch. Let me dial you up. What am I doing? Oh, here we go. Okay. Let me see if I can get him. Hey, Mitch.
Can you hear me?
Yep. Can you hear me?
I can hear you. How you doing, man?
All right. I'm going to bring you on right now. Let me make sure your levels come on and say something.
Hello, hello.
All right. Everybody, Mitch Ray TA. He's back.
Good
Sound.
to see y'all, everyone. Hopefully everyone's made it through the evening and the morning, whatever. Prayers for Ukraine, because yeah, invasion that has caused lots of volatility today, right? I mean, futures gap down, not too bad, not like, oh my God, COVID crash, we're limiting down. It was only down like almost 3%, on the Nasdaq futures, and then there's just been automatic buying ever since the open. How do you feel about that?
It is absolutely one of those times where I'm going to jump over to S&P chart, where I'm blindly going off of the patterns for reaction trades, but respecting the obvious. The environment's different. We do have what I would say harmonic pattern support with this big shark pattern. We talked about this. You and I talked about this last time we spoke, of just simply the reaction character, no follow through, and then the total return with essentially the 113 off the October low to the December peak is that
Mm-hmm.
was 41 180, and my the overspill hop level harmonic optimal price level 41 110. We made a low this morning at 4104. We're bouncing, and okay, that should react, but the larger breakdown will certainly happen when these patterns fail. When the bullish patterns fail, those are your signs of the bigger continuation.
It's interesting where the S&P 500 futures bounced, off the bearish 50 from the, whatever D point or the C point in this situation to the D point. You had a 1272, and that was confluent with, a lot of support. I mean, I guess kind of a lot of support from April 20th of last year and June of last year. So it was cool to see at least where a reaction was occurring, where this potential bullish and golden candle will be confirmed in 47 minutes on the S&P futures. I mean, I think all the index funds are engulfing on the 4 hour.
Yeah,
So like, what do you just because I don't really ever talk about it that much, targeting for a bearish 50 in this kind of situation. I mean, I get like we're looking at the type 2 return was like certainly violated on the bullish shark, but we knew like, a bullish shark in this kind of context is kind of lame, at all-time highs, no value. It just, and the bearish aspect of it is playing out pretty well. I mean, at least initially. So, I mean, where do you see targets for a bearish 50? Because if it's the trend's bearish now, the bearish pattern's prevailing and outperforming.
yeah. The 4 hour has the 4 hour does have a pattern retest that we're looking at. This daily structure, which is I think ever since we really started rolling over a month ago, has been the dominant pattern across the board. The first reaction usually because the here we have the shark completed at end of January. That shark is a reactive pattern, folks. It's why because it typically has this 1618, and it's usually like a throwdown uh, correction. And then we went to, and it morphed into a 5-0. That's what Mitch was
Hmm.
talking about. So that you have, you have the bearish pattern. The software didn't pick it up, but we talked about that of why it was still valid. It went to the 618. And so you have that pattern, the 5-0. The first stop is usually like an 886, and we're retesting this prior bullish pattern. So, not surprised to see this comeback hit there. But if we fail the 4110 level, the only place these things go is it just does a 1618 down move, continuing that swing. You don't get a type 2. Let me see here. Maybe we get I mean, we've been down straight down like six
Are we
days.
for the 1.618, are we Fibonacciing from, like 0 to B, or are we Fibonacciing from C to D here on the 50? How
You
to get our
go
one-618?
the off the shark or whatever. You go from that C point low
Okay.
up to the
So
4500 level.
so
So
we're talking 3987
yeah,
target 1618.
yeah, that's
And the really bad part of that is like, there's confluence at the 1414 with the May 13th low. But the 1618, I mean, there's a peak from March 18th, but my God, I think breaking below 4124, you could be in some trouble. Yeah, because I think, the swing lows on the way down are really important. More important probably than the swing highs,
yeah,
to be regarded as support. So yeah, again, 1618, you're kind of, ugh, not that great.
yeah. Mitch is referencing some of the static prior highs peaks. You go back to 2021, basically around 4000, looking for some kind of prior support to hang a ledge on, but um, I'm just trying to rationalize it of okay, how do the patterns unfold? How do no matter what's going on here in this environment, we knew this was a shark pattern. We knew it had to get retested. If it's going to be a larger bear market breakdown, we'll default to the weekly, but this pattern will tell us. I mean, we fail this, and you keep going, you slide under 4100. I mean, the 1618 is kind of an overstretch. Shouldn't be too much of a thing. I would say what happens beyond the 1618. That's where your larger trends get established. And I think you're at a minimum target two where you are currently at the 113 level, but the larger breakdown really starts to happen now under that hop level. A 1618, what we're saying, 3960 or so. You're right. There's nothing there. I mean, there's really nothing from a static technical perspective. There's really no areas to hang your head on until I would say pre-COVID high, which is around
Mm,
3400. And I
yeah.
and I would just do
Yep.
ratios. I mean, at that point, what I'm going to say is essentially you drop down to this 5618 zone, which is 3500 to 3100 off the COVID low, or you want two big numbers, and I this does become, I think, a clearer scenario across the board that the relevant measured range for everything is off the
Mm-hmm.
COVID low.
Absolutely, yeah. That's where you're gonna get your true fibs.
And
And yeah, the golden zone, right?
yeah,
382 to 618.
yeah, and those are minimum. We'd normally look at the larger area. I think a 50% pullback um, wouldn't be
3500.
much. Yeah, and even where we are now, if we fail this pattern on the type two and we crack 4100 or something, there is nothing really below that. And even we could say 39, whatever, but I don't think so. I think at that point you're in a full 382 correction off the COVID low down to that 3780. That would be a first stop with I think lower targets possible down as much as a 618 off of that. I mean and it's not, in terms of time, you're not giving up a lot. In percentage, that would be your 20 plus percent correction in S&P. Nasdaq just hit 20% today,
Mm-hmm.
and I don't.
Bear market, yeah.
Yeah, and you're not going to stop. Here we are again with another scenario where it's not going to stop on a dime, much like crude oil, which we should take a look at.
Yeah.
Um,
Hit 100 last night. It's beautiful, man. First time since 2014, the oil glut, or before the oil glut, it was on its way down already, but that's incredible. And I
yeah,
think it could go much higher,
yeah,
probably.
just continuing. We've been talking about crude. I've been talking about it. You and I have talked about it many times. Of basically above a certain level for, I think we agreed, 82 and change. This breakout was for real, and we haven't had a pullback at all since the run off of 62 from December. So you're up, 50% off the December low is a remarkable amount. I mean, that just is a hell of a run. But you have, again, with all of these, you have to default to your longer term time frame to get the perspective you need to see the fact that this is cracking historic levels in a way that's hasn't done in 10 years.
Mm-hmm. Yep. And once it breaks 100, it's just I don't think there's anything stopping it from going to 115 really fast. I mean, that's where all those peaks are. It's like 110 to 115, and then above 115 is just yep, all-time highs, which I can just imagine, in this market environment with everything going on, it could certainly see those again. But that's probably really, really bad if you got U.S. oil at 147 again.
I do think that this is more shaping up to be breakout to new contract highs. You have this really strange thing with the continuous contract. The fact that it went negative minus 40. You have
Oh,
to
USO, yeah.
Yeah, and you have to go to like June or December. to get some kind of perspective. So when you go to those contract months like June 22, you see that you're at contract highs, and that does matter, especially for traders, institutional oil traders who are trading these instruments. The fact that you're into new price action, new highs for the contract in strong, real strong character, tells you for that contract you have room to run. And and th-
Yeah.
and this is the one thing I wanted to show for. So you, this happens for IPOs and all kinds of things where you look at the all-time data, and a lot of times you can see patterns. We see it in crypto where the entire all-time data shows you nice formations. And so on these oil charts, June, December, as they all break out, they're doing shark patterns, going up to say 113 for now. There you go, bring that up. And eventually, yeah, we'll have a pullback, but we know the shark is just reactive. And after maybe a pause up
Yeah, we
here,
hit that near 886, from that high from June of 2014. But I guess we'd be going from the April 2011 highs, and you haven't hit the 886 yet. Wait, hold on. Sorry, my Fibonacci. I haven't been to CL in a while. Dang. Wow. How do you even Fibonacci? Do you even regard that crazy where it went to negative 37? Or do you just go from the low low from 2016?
for the CL, it's a really tough call. I'm looking at the that's June contract, but here's the continuous. I'm a believer that as crazy as that negative wick is, there's the monthly on it. From a measurement basis, trading happened down there. This is not a thin market. It's not like the super thin commodity market that might have some bad wick. But if you look at that, you're and treat it like that. The 886 is I think 122 on this, and it is relevant for the measurement. Let me bring what's the exact number is. Oh, I guess no, I was wrong. It's oh yeah, yeah, I'm doing it off the wrong peak. So you got the 886 off of the decade high,
Mm-hmm.
which was about 100, but no, all-time high, which was 147. I got to bring that up a little bit more.
Yeah, yeah, 2008 to the
126.
yeah, you're not even at a 786 yet.
No. And I mentioned this before, even the static, let's say we're going to go do a run to retest cyclical static highs from 2011, 2013 with a fraction of the geopolitical noise we have now. I mean, look, Crimea was 2014. Um, spent some time up there, then reversed off of that. This is a much larger magnitude situation, a lot more critical. Also, you're in the middle of the winter, so
Yeah.
this is going to kind of disrupt all of the flow of markets that um, there's just nothing up here until we hit the measured levels, until we even register some kind of inflection of a oversold, overbought. Um,
Yeah, monthly you're not even overbought.
no,
And there's zero resistance over at resistance till 106 US oil on the monthly. Yeah, the fact is like you're just even if you just zoom back in, you're breaking out of the ascending broadening wedge or that channel you've been in, that upsloping resistance, that supply line's being like broken right now pretty well. And even on this pretty big pullback on the daily, you're still breaking out. I think that's incredible and just so strong. But then you have like, gold and silver and platinum. Platinum was killing it last night. I think all of them have pulled back since the buying came in this morning on the equities market. But yeah, yeah, like platinum hit the highest price it had seen last night since July of last year, and it's anything above 1,030 is extremely bullish. Like that's
here's
yeah, we're
gold. Gold finally hit our target too at 1946. That was something I've been talking about for a long time, ever since the retest way back in August at 1720. And yeah, you have a crazy candle wick today,
mm-hmm.
and they really smacked it. 1946. on the continuous contract. Incredibly significant. But
Yeah, 1974 on spot. It's wild.
yeah,
And
as
that
the,
was the highest price since September of 2020.
that was the high. And I'm not surprised to see this get smacked off of, some of these prior highs before it preps the run up to 2000 or more.
Yeah, it's just the risk on assets are catching a lot of bids this morning, and it's kind of like inverse correlated to equities right now, oil and precious metals and probably commodities in general. I mean, I looked at the other commodities like,
Yeah,
let's
it's
see.
they have to cover the shorts. I mean, and I hate to use this saying,
The
but
corn pulled back. Yep.
dang if it's not true. They've always, it's kind of like a cynical statement, but they say, when there's blood in the streets, you buy, and it is crazy. Like when you see mass headlines like that, it usually you see the market at least do some kind of counter rally, no matter what. That's probably where we are. We know what the harmonic levels are currently. That and it's this thing has run just an amazing amount, but gold is just continues to build. I think this is just a pause against target two. The software recently generated a crab up to what we would be looking for, which is a retest of the all-time high. Your 1618 is basically 2068, and this is a just a regular crab. So nice setup there where
Oh yeah, nice confluence. Yeah.
this should give us a minimum run. But the thing that I know you and I've talked about the long term of this thing just building and building in the wedge. Go to the monthly.
Monthly's insane. Bullish engulfing candle.
Yep.
And you're above 1921, which was that 2011 high. I think that's insane. I think like, man, if you can close the monthly above that level, that is like the neckline of the very large couple handle, right?
Yeah. And a lot of people are talking about that. Technically, that this thing is not only held up, but triggering that kind of consolidation before a larger move. And once this does get going, I think this current candle, could be the start of it. Usually, you see that initial thrust followed by maybe one or two other candles. Like I say, big moves start with big candles, and this would be a nice big candle to get this going. I've mentioned this before that the upside target for gold, and this is continuous monthly, is already the 1618 up at 2470, 2469. And again, it would only take maybe a bullish close above anything above 2000, anything above 1946, anything above 1950. Then you really do start an accelerated move. I think 2500.
Hey Scott, can you give me 2 seconds?
Yep,
I need mute like I think delivery drivers here. I gotta go let them in.
go
I'll
for it.
be right back. All
All
right,
right.
thanks, man.
Yep. Mitch will take 2 seconds. I'll mute him out. So that's where we are. And again, the acceleration phase of gold and the precious metals just getting started. I'm not really there. It's not an easy call to say this, but you have to go to things like platinum, something that we've talked about where this type 2 bat pattern that we mentioned is a sign, a very bullish sign for the metals in general, where type 1 took a fair amount of, several years, 3 years. But then just back at the end of last year, we came back and retested the 885 level. And we would be just like what we saw on gold from 1720 up to 1946. We're now targeting 1495 on platinum. Absolutely. Quick question. Do you need to wait for HSI bullish on ES daily for a reversal? Yeah, I'll look at that in a minute. Couple comments and questions. Jiu Jitsu Ghost, there is a free trial on the software. I think you came in late. I did a 2 seconds, but really quick. Folks, get over to harmonictrader.com and become a basic member. That's where all of the information is for software, all the harmonic pattern webinars, the course material, and then all of my books that define all the harmonic patterns. So join, get there, and please take the free trial. Don't subscribe until you get the free trial. And the last note, I did want to look at the scanner today, but we've got Mitch in here, so I might save that for Monday. Really quick, with the new updated HPC for TradingView, we have this combo, HPC combo. And one of the updated things we have done is to bring in the scanner, the harmonic patterns watch list. So go to here, go to invite only scripts, and click the watch list. That will then bring in an updated version of everything that you want to see for harmonic patterns. And you can go into here and update it. Go into the settings, update all of our the data feeds, etc. So, and that
What's up?
that should be working a lot better. 1 second, let me bring Mitch back in.
Pete.
Hold on. Okay, great. Mitch is back with us.
Hello. Sorry about that.
No worries. So
Yeah, I got this.
I will, folks. Monday we'll do an update on the scanner functionality, the updated scanner. So we've got Mitch. We've got the for TradingView for harmonic pattern collection. They just released a version 5 of their programming language, and so our scanning capabilities have improved vastly to basically list all the pattern matches in an automated scanner that we have on the bottom of the page. Although you can't really see it because of the dark settings, but um, we'll do that more on Monday, folks. I definitely want to share some of the other updates. And I think with this new version, we're getting a lot better pattern matches than before. I thought it was good back then. This is even better. So let's get back to let's quick peek on. We're talking about precious metals, and I had mentioned this on Tuesday to look at things like Barrick Gold, symbol GOLD. Um, Really nice bullish engulfing on the monthlies, and I don't want to spend too much time on it today. Go look at Tuesday's session, but with what we're seeing today, what we're seeing with this continuation, these are finally getting off the floor that get them on your radar. These are going to become a lot more active, and especially as gold makes its way up, I think we have to bank on gold going to all-time new highs and looking for money, major money, for the first time in a long time to play catch up on these stocks and in this sector in general. Bring up the GLD.
Good Lord. I'm scanning some equities and holy crap, if you go to like financials, it's just unreal. It's like all these double tops happened and they're playing out like unreal performance on the double tops. Like just look at like I'm just PMing you. Just like stuff like that, like State Street. You want to talk about a legendary shark right there, man? Just sorry, I just didn't want to get
On
off
that,
track of where we're
no, this
going.
is STT.
STT State Street, yeah, man, it's just crazy. What a
Let me
just
I'll pull that one up on the program.
glorious shark.
Oh yeah. Again, look at that. The daily, big candles. Big candles precede big moves. That one, let me go to the weekly here. Those banks, yeah, they got really scuffed up. Yeah, I see what you're saying. And there's nothing, the minimum retracements on a lot of these broken trends now still lower. than where we are. There's a monthly on STT. Yeah.
Yeah, it's bad. And then it's just like there's just constant ones. I mean, like if you look at USB, I mean it's at a sh shark, quite a shark, but maybe kind of a it's like a 113. I mean, you can definitely tell it's a W, and it's just like a rectangling, and it's like at the bottom of the rectangle. And once that support breaks, it's over. Like this thing's gonna like dump so hard. Good Lord, man. It's just some of the bearish looking stuff is just playing out so well. Good Lord.
Let me look at Bank of America. And this makes,
Yeah.
you have a lot of things here where, okay, if gold's going to do things, that definitely means something. But just from a general perspective, if gold's going to break out to new all time highs after grinding in an accumulation for 5, 6 years, that's a significant technical event. Here's Bank of America on a monthly.
Beautiful, beautiful shark, man. Or was that BAC?
There's BAC, but here's, I know, oh, that's what you're saying. I see that. Let me take off the pattern and just let's look at the 886. Go in the quarterly because here's the other thing. I know what you're getting at. There are a lot of these major stocks. The go back, even go back to the financial crisis low. These banks all came up, failed their all-time 886s. If it's a shark, if it's a bat, they're all doing things at very critical levels that, if you connected dots, suggest that minimum reactions take these lower. There's your 886 off of that. That was
So
exact.
pretty, man. So pretty. That's just perfect.
Let me blow this up.
Of course,
Bank
it's an 886, right?
Bank of America at 49.11, now 42.48. But there's a couple things there to consider where not only the 886 folks, but the fact that you could not break out to all-time new highs. Think about the amount of money that's in circulation, where if Bank of America is not going to be able to go higher than this, it says a great deal about the long-term trend or the real trend of financials. Let's look at the
Oh, one sec,
XLF.
man. Sorry.
No, go
One
for
sec.
it.
Just dealing with this guy, the delivery guy
You
home.
got it. No worries. I'll put Mitch on hold here for a second, but on mute. But Mitch was saying some of the banks too that have hit some major levels that can't get through. XLF. Oh, I know what XLF was on the daily. You had a crab pattern up here. Hold on one second. We had some things up around $40 on XLF. Let me bring another big financial. Wells Fargo. Yeah, Wells Fargo. Another. Take a look. Look at this crab pattern on the daily. That's what it was. Here's Wells Fargo, folks. Shout out to my brother who works there. Sorry, Steve. This is not good. Type 1, crab pattern. This is a perfect crab. Why? Because your B point's at a 618. You have a 314 at the BC, a 1618 at the XA, and then your ABCD is really, it's a 1618, like there. We've got it optimized as a 224, but it's still okay right off the hop at 59.96. This goes to 49.23, folks. Just within the framework structurally, how we look at that, it's a great chart. But we still have to look at that to go to target 2 as a minimum reversal move. Absolutely, the framework, the reaction, and actually take a look at the HSI, perfect HSI on the check back here. You go back to the 14th, happy Valentine's Day. You registered HSI on the retest, and then you checked back at 58. 77, 59, and that started the free fall. Beautiful. I mean, that is beautiful. That's why I feel in no matter what happens in times like these, it's that understanding of the patterns where you are within that framework that's going to help dictate your action. How far will it go? One or
All right,
two
back.
more.
Sorry.
Yeah, no worries. One or two more of the financials. Oh, wanted to show you. I don't know if you saw that Wells Fargo chart, but Wells Fargo, the daily did this perfect type 2 crab.
Oh
And
yeah, I had looked at Wells Fargo. It like was hitting that resistance, like that crazy resistance back from 2015. It's just like that. I mean, that's good luck. You double topped in that inflection zone. Yeah, it was perfect. These bank stocks were set up for much lower prices, or just at least a major reaction reversal.
And the other thing about a lot of these big patterns that have been generated across the board, that they're coming off in a hard way. Here's Wells Fargo on the weekly. I meant to bring this up. Look at this shark pattern right off the hop level.
Hmm.
Target one on this shark takes you down to 36, folks. So it's not something you want to fight. It's not, as I said on Tuesday. It's not that I want to sit here and FUD the markets and everyone's hopes. If anything, we should be looking at puts. We should be looking at larger downside scenarios once we take out these minimums. So the patterns are there. Quick, want to do a check on tech. Do a quick update
And
here.
actually outperforming the Nasdaq has been and the Q's been outperforming the S&P and Dow Jones today. I guess maybe it's like I don't know, people. It was like the most beaten down one. It's catching the most bids today.
Here we are, plus
Like
25 on the day.
the Q's built a freaking gap, man. Like nothing even happened.
Yeah, there you are. Nice. There's a 1 minute chart on NQ. 525. That might be it for now. Let me see the 5 minute chart. And anytime I come into the markets, folks, I'm always looking at the what's the 5 minute saying? What are the last 5 minute?
Uh-oh. Distribution going on right there. Right, one, two, three. Third lower high coming in. Unless it, keeps going. But yeah, you don't want to see it reverse here. Because then it's gonna be like, I don't know. Just looking at five. It's a 5 minute three falling peaks. Yikes. Or is it just flagging? Hello? Uh I don't think I can hear you anymore.
Hold on 1 second. How's that?
Oh, okay. No,
Okay.
you're good now. Yeah.
All right, great. We have this bat pattern that completed pre-market, essentially 13,050, but it's still a type 1. We never got the full retest, and I would still look at
True.
this as a reaction.
Mm-hmm.
Keep that. This is just for today. We're what, up 20, and again we could easily go back minus 100. Not a problem. We'll keep that one up. What I want to highlight on Nasdaq and look at a couple of the big ones. Simply the daily crab pattern. We started the session. I pulled this up. We fell about 150 shy of the big 1618. This is it's kind of a tight configuration, but it has the ideal alignment where this XA level from October low to the November peak. Nasdaq peaked out long before the other indices. Puts our 1618 at 12,884. Even though we're trading 13,500 now, I'm still, this would still serve as my ultimate downside target for this current move. So I'm
Yeah, I've got
thinking,
that one up there too. Yeah, it was so close to 1618. Just got 1 4 and 4 and started reacting.
yeah, it would have been actually better had we hit that today in one
Yeah, because it
big.
was a support too, right? Looking left.
Yeah, yep. There's the 30-minute chart. So I'm still saying look for some bearish patterns between
It's the
now.
low from May. Yeah. Dang, it's like perfect. But
Yeah,
yeah, just understand like the market is confirmed a bear trend, and I think until you capture prices above 15,256, you will remain in a bearish trend. I mean, you have to look at it like that. I mean, there are rules. When you reverse your trend, there are just certain things that have to be done for you to say that the trend is reversing to the upside. Just like Bitcoin, right? There was that 44,444. You up thrusted through it, but you couldn't stay above it at all, and that reconfirmed the downtrend. So now the Nasdaq has its own rules and swing highs it has to take out if it wants to reverse. So
yeah. I think the Nasdaq is this first move on the weekly has all the character of a 1618 kind of throwdown. And I would even venture to say as low as the swing low from, if you go off of the 2021 swing low, was around 12,250 or so. All of that puts you somewhere around 12.5, 12.8. I would feel pretty good about that level. Here's a static, just draw a static line of that support. And I think if you go left and look left, you've got some points here. Let me use the box.
just a reminder, I think President Brandon's speaking soon, so we
Oh,
should
should we
be
go
looking
in?
for. Well, no, we should just wait to see what kind of reaction we might get, in the markets. I'm sure volatility is gonna
Here,
happen
let
up
me.
and down.
Yeah, let me see
He's
here.
late though, I think, right? He's late by
Is
like
he?
15 minutes or something.
Okay, let's see here. Let's see here. Brandon press conference. Oh no, sorry. Wait. Biden press conference. Telling you, I mentioned the word malaise in the last session, and we're in a malaise,
To the
folks.
President of the United States for
Nope,
the past.
this guy's just doing what they do. So we'll see if he comes on, see if he has anything to say. Quite frankly, if he really wanted to do something, they would have really taxed sanctions. So I don't think they truly want to get anything done. Right off the
Yeah.
bat.
Well, the fact that he, is speaking now, right? If it was that important, he would have said something last night when this stuff was ongoing or something this morning, but he waited till literally 12:30 Eastern to speak. This full-scale invasion's going on, man. I mean, just saying, it's maybe not a priority. It doesn't seem like.
Mitch, can Bitcoin fix this?
Uh, Unfortunately, no. It's just a risk-on asset like everything else right now.
Yeah.
Dude, just look at it like Google or Amazon, right? It's probably gonna do what they do.
Amazon's pretty interesting. It has a
It is. Oh my God.
beautiful
Yeah,
pattern.
Amazon. You got to go to that chart because, like, what if things actually did reverse here? This would be like the lowest risk entry of all time. But it's like, again, yeah. We need more than just one day after an invasion. Well, I need some follow through. Like, but just the bottom of the range, man, 2887 to 2920. You're at 2910. I mean, if that held, it'd be like this massive double bottom.
Agreed. We
Be
mentioned
crazy.
this. This is the autogen crab pattern that we've been looking at for a few weeks. This is defined the 1618 at 2814, which is right there. So the 1618 from the October low to the November peak, we sold all the way off down to 2814. Your low is 2707, and then did perfect type 1 reaction on the earnings, and then you know it, type 2 return. Today We hit the XA 1618 level at 2814. We have bounced. So by definition, that is your type 2 starting.
Hmm.
What's confirmation look like? Maybe a little bit lower. I don't know. We got really close to where.
Dude, I
Uh,
think if we're going for a, if you're getting, I think like you can't be like doing what you did today and then start rolling over. I don't know. Like, because if you're talking about a type two, it's literally type twoing in the middle of nowhere looking left, right? There's like no support. So I would pray that it would be a higher low double bottom now. If it's gonna play out, you don't go, you never take out your open price 2,800 again, right?
maybe. I definitely think it's demonstrative, which is what you always want to see. You want to see individual price action at the numbers that hit and do something quite clear like this has. The follow through always matters for continuation. If this is a target, if this is a type 2, well, by definition, our objective is target 2 at about 3360. So I think there's plenty of time. That's a 20% move from even current levels.
Mhm.
But let's see. Like I said, give it. We're trying to catch a knife at this
Yeah,
point.
it's yeah, longing now. I mean, like you could, but dang, what happens if like it was just literal buyer induction, a rally because no one saw this coming, and then tomorrow we just dump again? Uh, what's the volatility looking like? How high are we on that? Right?
Of
Good God, it went to 37 at its high today. It's still at 34. It's very elevated.
Yeah, VIX was would have been great. Again, we've got up to 40, 30, yeah, 37 this morning, still around 33, 34. Let's take a look. Actually, volatility is an interesting chart to look at with harmonic patterns. A few
Hmm.
people have noticed that the patterns in on the volatility index, or depending on what your vehicle is, a lot of really clear patterns when they materialize. So I'm looking at a 4 hour. I would say you go to the weekly chart. If we were going to get some kind of capitulation, remember, COVID low put a 84 reading on VIX, and you haven't even taken out
Yeah.
substantial highs going back from a year ago. So that would be another one to look for. If this is going to accelerate, get worse, you look for that larger expansion above 40, and a quick sharp move to get the capitulation. But that doesn't show it. Really doesn't show any kind of major significant capitulation.
Well, obviously, like all that accumulation since it bottomed out in 2018, it's just only made these higher lows, and there's like a well-respected demand line, and it like bounced off of it from June of last year to January this year, and it's just now at its highest point. Interesting.
Even on the
It's like,
VIX, sorry, the VIX readings, most of them of your any serious corrections going back the last 12 years has reached minimum 45, 48 levels. So I would think the same has to register for this to be to mark an inflection low. I wanted to show one or two more. Here's Facebook, folks, Meta platforms, and
ooh,
still a bleeder.
yeah, wrecked, man,
I think everyone's
wrecked.
going to know what I said this actually a week or so ago, that another poster child for what to look for at the 382, the 618, and then ultimately the 886, because this thing, ever since the 382, only accelerated after failing that retracement. Your 886 off the COVID low is 165, and no matter what happens today on any kind of a bounce, what have you, I would favor that, and plus that and about 6 months of stabilization before you can even think about looking at this as a is this a continuation or is this only a correction within the long-term uptrend?
Hmm.
And here's another all-time chart. You can throw a trend line there. It's the
That
trend.
886 is in the middle of nowhere. If you're talking about formal supports,
Yep. And you can go back to
150.
this on all-time data, even with Facebook. This is, I think, the other thing that we need to consider of all of the IPOs that have come public in the last 10 years. This is probably going to be end up being the most substantial threat, the largest pullback since the
Mm.
IPO. And you're 886. If we get crazy here, folks, my point is this: the 886 on Facebook is $60, and that would retest, reset the whole decade performance. I've seen it before. We will see it. It will take shape under certain levels, like Nasdaq breaks down under that 12.8 level. Facebook doesn't hold 165 because the all-time 618 is at 158. If we get another down month, and let's say we finish the quarter under 160, these would be substantial signs of a much larger Nasdaq decline a la 2000 than just some kind of serious stealth correction here of that's a 50% haircut right now.
Yeah, I would say that I mean, the reason it's dumping, it was dumping before, I guess a lot of the stuff had been dumping, and it's the fundamentals of it, right? I mean, you can clearly see their user base has literally capitulated, right? I mean, from 2012, when you had millennials, they were like 90% plus millennials were actually using Facebook, and now about 21% of like Zoomers are using it. No, it's millennials actually. Only 21% of millennials are using it. So there's like the user growth is gone. So I mean, what's this company? Like that's like that's the exact same. That's like Metcalfe's law. That's like what we're kind of booking on for crypto for the long term. Is like it's the users and the adoption of the platform, and the platform is like done. Like it's inversing itself. So there's not much to Facebook besides its user base, and now that's like dwindling substantially. It stopped growing, I think for the first time like ever on the last earnings report. The first time ever to stop growing.
Yeah, I think the metrics of at least even being able to continue assuming they're going to have the valuation that they've been able to maintain has just been they shut the door on their face, and we've seen it in terms of the long-term chart where this started to break down. Facebook did have some serious patterns up here that preceded this, where I'm
Oh
starting to
yeah,
I'm
dude. The
starting to
double
wonder.
top.
Not only double top, we had a deep crab up here right at the hop. The hop was 368,
Oh yeah.
and we go back to back. So we went
Hear that?
deep crab, and now we're another deep crab, but we're failing because look at the character going into the zone. You know, there's the CD leg trying to form, and then you just drop, do that 30% move in
Like
like
it was nothing.
not only nothing, but it's amazing that this thing uh, pre-earnings did the drop, and the drop was exactly to the 1618 off of that
Uh
October low, and just kept on straight on through, and that's
yeah,
the flawed behavior.
yeah, like reacted, quote unquote, and like didn't do anything. Then yeah, a couple days later, just kept collapsing. Yeah, and then there are plenty of assets that look like this too. Like just how about Kathy Woods? How's she feeling? Ooh,
Arc is
yeah,
that is that
Ark
Arc A or Arc just Arc? Let me see Arc A.
ARKK hit its lowest price today since May of 2020. Fell
That
below that critical $60 peak from February 2020, but has gotten back above it at least for now. But it's going for a full 886. I wouldn't look at this again until $48. And that makes perfect sense. The 886, the pattern completion zone of the bullish bat, is literally confluent with the major peaks from June 2018, September 2018, April 2019, July 2019. I mean, it's like that X marks the spot for Kathy Woods.
And another
There it is.
example
Yep.
of a cold vid, the cold vid 886 coming back to retest. You're starting to see this individually in the former high flyers like that.
Oh, and there's
And
literally a gap right at the 886. April 13th, 2020. Look at that gap.
let's open that up.
Dang, man. It's like X marks the spot.
Yeah,
886 support gap fill.
I'm gonna remove the
Doesn't get
bearish.
much more clear than that.
There you go. Yep.
It's down there, yeah. But yeah, I mean, like, they're like Tesla, like the largest holding of this fund. I mean, it hit its lowest price today since August 26th of last year. Uh, yeah, man, Tesla going for its own full reset, which is way lower, or not way lower, just somewhat lower, right? It's doing its own little bat, another bat, like the 626 PCZ of that, right? So that's
Hmm.
what's going to take Ark down, right? I mean, if Tesla
Yeah.
gets to its pattern completion zone, that's how Ark goes to its own $50, $48 PCZ.
The interesting thing is the software's kicking out a crab because I don't think it likes the alignment for the bat scenario. I would definitely say something like that
Oh
gives
my God.
goes you to an 886.
That's a weird X anchor point though, right?
It definitely is. It's the part of it is the ABCD configuration that we kind of back calculate, which helps to kind of get the alignment correct. This is let me bring up different color. I gotta change that. But the fact that this is generating the crab now as a pending potential pattern and we don't have a bat suggests that 886 at 635, yeah, that would be a minimum level, but maybe a throwdown underneath this support, much like we saw with some of the other patterns that were taking shape, like Nasdaq. This reminds me of the Nasdaq from 2 weeks ago before the crab completed and it violated its 886. Now you've got this creature saying, all right, maybe down. I'm gonna look 620 first. We'll see how this crab
Hmm.
materializes, but um, I agree that you could be simply in a pricing issue where the market environment continues to shift dramatically bearish. It
Hmm.
becomes just a nightmare. This is what bear markets do. They become a
You want
nightmare.
you see that demand line, the anchoring from March of 2020, the COVID crash low, and then like you anchor, like
Yeah.
May of 2021, and it gets like four touches because of all those higher lows right there. I mean, you tested that January 21st, you rallied pathetically lower highs, and now you've broken that demand line. You've broken the 200-day simple moving average, and Tesla below the 200-day moving average really bad because it's like it very seldom spends time below that area. I mean, that moving average. That could also be like, yeah, something, a much more significant correction could be going on. So like it hits the 886, it reacts, it runs up, just makes a pathetically lower high, and then rolls over or something.
Not to mention you have a bat formation. You do have the M formation off the top.
Hmm.
You failed that B point right
Hmm.
there. Now you're in accelerated bat action
Yeah,
magnet
so oh
move
my
down.
God, you could be in a huge C to D wave from the COVID crash low. Oh my God.
Yeah.
Let's
It
see, does that play ball? Yeah, that plays ball. Like think about, see, you know what that is, right? The Shark PCZ in that regard is 168.43. That would be end of the world for so many people if that played out.
alt
That'd be like
oh,
big,
I see what you're saying.
yeah.
I'll go here to the
It's
other one.
a little high on C though. That's the issue. It's like a 1.89 on C, or I guess B in the situation. Well, no, it'd be C if it's a just sharp. A little
Um,
high there.
go to the trading view program platform. It's trying this blue I have a blue pending pattern that's matching here for Tesla at the moment. But nothing. I mean, really nothing. There's not even confirmation on any of this. And the larger consideration Mitch was referencing was the two scenarios of what if we have an 886 and bat, really a bat. It's not ideal. Your B point 51, C 886 is down here at 615. But what if this fails? And that's what, again, your nightmare scenario will come in chunks. Our first chunk is about to happen. I think that's the move to 12.8, 12.9 on Nasdaq. For something like Tesla, it goes to 600. But what if you just keep sliding and keep going lower? Then, yes, as I just was saying with Facebook, trace out the whole situation of what's the connect the dots, connect the dots of what's there. Don't question it. Just draw the formation. XABC is a shark, sets up a shark. We're D point at the 886. I'm just saying, and that's what Mitch is referencing. You connect the dots. The shark is about 158, 156 of an all-time 886. Now, the thing about the shark is that you would need, sorry, bring this back here. You need the BC level to be a 1618.
Yeah,
So
that's way too high.
so from B to D, or sorry, B to C has to be a 1618, which it's still valid because it can overshoot the 886. We just need to combine. It has to hit the 1618 of this B to C move. That's one of the things for the shark. It has to hit the X to C 886, which it does, where those minimums are, I would say, 135. And that's only if we do something completely miserable under your B point.
Yeah, Kathy Wood's gonna be retiring. We get down there.
Yeah, I mean,
Elon too, maybe.
Ark could get crunched. I think these other ones could get hit, and it will take the minimum. So take these. Anyone that hasn't retested the 886 from last year is not there. Oh, is Biden up? Let's see.
Dude, so many have already hit like they're on their way or they're near it, right? Like Teledoc, just all the holdings of Ark. Yeah, dude. Oh my God, dude. Look at Teladoc Health. That's their second largest holding. Holy crap! You talk about insane,
Teledoc. Whoa.
dude.
There
It's
you.
like it hit the PCZ and it's like right there. I mean, if you talk about the low from 2019,
Yeah.
I used.
And this is, well, you can even go back. You can go to 2016 and do the all time
Yeah.
charts.
Oh
And
wow, if you do that, you still got a long way to go. But
XAB.
it lines up perfect with 4266, which would be a swing low from December 2018. That's confluent with the 886. So you're not too far off if you anchor down there. Not too
Amazing.
far off at all. I mean, you
34.
still have a crap load of value to lose. I mean, if you were gonna actually do that, there's still 32 to 34% downside on T dot. But yeah, I was just anchoring from a discernible swing low from December 2018. You're literally like at the PCZ right now. But yeah,
It does matter. This ABC configuration does help us because we want to use that. Look at a 1618 minimum. I mean, that 1618 is really important because it gives us a clue of the character of this throwdown move. And if we look at that, we blow up the price action. Your 1618 right at 77, no response, not a touch of reaction at that level, which
hmm
is right here essentially, where I would then just say, okay, until I see something constructive, until we spend at least, I don't know, 5-10 days bottoming, reversing, give you something.
yeah, show something. Yeah, and engulfing candle, a bullish hammer. Three rising valleys, inverse head and shoulders, all the above at that level. Yeah. Yeah,
Yeah,
and you took out 786. You're just below the 786, so you're below support too. There's like really on T Doc. There. There's nothing holding you up where you are right now. It doesn't even make sense for it to rally here, you know?
No, it's just a pause
Terrible.
in this downtrend, and this is what happened in the 2000 .com bust. Your individual high flyers got taken out one at a time, and some of them absolutely devastated. Some never came back, and it made its way to the bigger players eventually, where your high flyers got 85, 90% of the snot knocked out of it. Your big guys got 60, 70% taken out before the low, or some even more. But this is what these are showing you, and these are major companies: Facebook, Teledoc, Zoom, or no, Zoom is ZOOM.
Oh
No, Zoom.
yeah, yeah. God, HubSpot, dude, you name it. CRM, New Relic, all these, dude, yeah, just you can imagine what's gonna happen to HubSpot. Looking at
Yeah.
this thing.
Actually, Zoom's hitting the 886
Yeah, I think,
now,
yeah.
right now at 119, but the blue means it's still a pending pattern. So until that completes by
Mhm.
Friday, you're still in the construction phase of this pattern. So
I thought you had to go just a little bit lower, 107. Well, no, you're right. It's the 886, but think about like if it goes to a 90% retrace, it tests that high from June of 2019.
yeah,
The fact that you haven't reacted at this 886 leads you to believe that that probably is going to happen. It'll probably go test it. I don't know. I mean, no bids, dude. It's real bad when Zoom video is down 0.67%. Um, Actually, I don't know because the market's all down and stuff, but it's actually not. It's doing kind of what everything else is doing, you know. But I mean, like there are assets out there that have gapped down and are not. They have not filled their gap yet. Like this one filled its gap.
yeah, I would still say 886 has to get a hit. You're talking weeks of this might eventually be an area where it could be a fantastic opportunity, but it has to do a whole bunch of things. And you're till you hit these breakout of trend lines. Not only would I just be on the sides for any possible longs, but actually I would be looking at the other ones that are on their way down, haven't hit the 886 yet, but are likely going to complete this, whatever the relative scenario is that is obvious. You have to target them and just be patient until you get there. Here's the other one that's unbelievable: PayPal. Just
Oh man, and Square, ooh,
PayPal and Square,
literally destroyed.
and you
Like
go
shambles.
all-time data. I mean, you have to go all-time data. Really, a clear already with these. You're at the 886 of the COVID low on PayPal, and it's what is it doing? It's just acting. We could say it's even a shark because of this tight XABC configuration. But 886 on PayPal, folks, was 107, 107.50. You're trading, you were as low as what, 94, 93? Straight on through. This is a problem if we're looking for examples or you're looking for some kind of technical hope. Um, Look, if you can't hold even the 886 on the COVID low, chances are you're going to retest, full retest to that inflection point. You do have a shark formation that
Yeah.
is, typical of a shark where you would go to the 1.0. And the full all-time 886 is again another one where it's 50% lower from current levels. You're trading, you got to go to 60 and change to hit that 886. And this stuff, when you get this far down and you're this close, you have to just wait for that 886 to reset the whole trend. This was one big move, really from 16 up to basically just a year ago. But I still say treat every market, analyze it relative to the COVID 2020 low, and tell me what it does at that 886. Tell me how it's entering the zone, and these are all quite ugly. That it's a sign of what can happen to the other markets. It's just not
Yeah,
even.
another Another one that you'd probably find interesting is Roku. That's also like the fourth largest holding of ARKK Ark. And it's doing the exact same thing, right? The full reset,
Yeah.
like way off from the April lows. I mean, it's at an 886 right now. I mean, probably lower, and it's
It's
done.
COVID 886, definitely.
Mhm.
We have, this is, you were mentioning this on some of the bank stocks. We have these insane double tops, but they're double tops, but they're devastating because the secondary peak in a lot of them went nominally above the prior all-time high and then got destroyed. Technically, that's devastating because it doesn't give you an M or W formation. It typically morphs into a minimum 1618 or even larger, like an all-time shark, which is what this is 68 on Roku. You're trading 125. So
Yeah.
this is the thing of uh, looking at the numbers and realizing something more devastating is happening. Let's say this was only going to do a 1618 on Roku. Look what happens when we hit that level. It's a massive uh, bearish candle down, continuation down. No, we got to see if we follow through lower. But you just pause a couple of weeks and then do another dump down. Any violation of last week's low is just get you to $68. So it
And
is
it's like it has to lose 50% of its value from where it is right now to be at reasonable levels.
yeah, it is ugly. I mean, it's absolutely from a tech perspective of all of those major stocks that, especially those concept stocks. Kathy Woods and Ark is going to go down as a lesson. Um,
Yeah.
I'm going to share a story with everybody because something that some of what I was listening to her last year, and a lot of what she said made sense of, be invested in the emerging technologies. And I'm more old school stock person where I love dividends. I love for longer term investments. I love those snail companies that give you,
Blue chips.
yeah, and steady dividend, reinvest the dividends, buy, direct repurchase of stock with the
They
dividend.
make money.
Yeah, and build that. But she was saying a lot of things like, why would you invest in oil or tobacco or anything, since those are old market last century industries, and we're seeing why. Exactly, seeing why. So I don't know how this is going to end up for ARK. You're sitting on a weekly crab at least, but fails here, you fail 60, you fail this weekly candle, it's over. And again, there will be a complete wreck. 90%. I think a lot of the tech in the tech crash 2000, most of your big name tech stocks lost 80 to 90%
They
across
did. Yep.
across the board, and some of them never made it out.
Yeah, and if they did, it took literally like a decade for them to recover. My God.
Yeah, you think about the four horsemen, they used to call it. So
Opportunity cost.
yeah, the four horsemen were Dell, Microsoft, Sun Microsystems, and Intel.
Dell's
Okay,
bearish as crap right now. Looks real bearish right now.
is Dell? I haven't looked at Dell in a while.
Right, it looks like the Dow Jones, like the right angled and ascending broadening formation structure. I think it just bearishly broke down from that. You can go to it real quick.
On Dell.
Yeah, it hasn't broken down yet. It hasn't even broken down, but it's the same type of like,
What
oh
time
yeah,
frame?
it's daily. I just posted my chart. Just gonna show you.
Let me see.
Still so high up, It's like all-time highs.
Oh, there's the Dow. Mitch just posted Dow.
Oh,
Yeah.
that's no, that's Dell, but it
Oh,
looks like the
Dell.
Dow Jones. Yeah,
Sorry. Yeah, it does look
yeah.
like Dow. The
Where you
Dell
said
looks like the Dell.
you said Dell was a four horseman, right?
Yeah, Dell
Of the
is.
Nasdaq, yeah, 2000.
Yeah, there's Dell.
Mm-hmm.
Now, what happened with that? Um, By the end of the that bear market in 2002, Dell was nothing, went private. Sun Microsystems basically got bought out for pennies. Intel and Microsoft they lost 90% of their value. And this is another one where, yeah, Dell's super strong, but if we break this uptrend, and a lot of these have violated their uptrends. Oh, wrong one. Again, minimum 382 or 50% corrections of this 2 year run, and that's really what you're looking at, puts you at 43 or 37. You're 20 lower from current levels. So you're early. I mean, it's still early, even with all this destruction. And we'll see how we finish the month, especially see how we finish actually tomorrow. But again, you're taking out lows. You go underneath those lows at 54. You don't have anything. I mean, that's the thing about looking left for the last 2 years. There's really not a lot to anchor off of until lower levels in the
Good
best of
God.
cases.
Dell weekly, like insane amounts of bearish divergence on just pathetically higher high. Yeah, man, like the downside potential is so high on this one. It's really crazy.
Yeah, that
But yeah, not much damage has been done yet. That's not like a lot of others.
no, but again, you're not going to avoid it. You're not going to, if this stuff's going to grind lower, which I think it will. I do think Nasdaq has to hit 12.8 to really wash this out. Here's Intel, and
Oh yeah, you were bearish on that one, right?
yeah,
Yeah, it's finally. Yeah, I thought it was kind of promising with that Garley, but it was the 30 bar play or 30 bar roll where it didn't do anything at the PCZ and just finally rolled over like everything else. But it's nearing like that steel wall, 42, $43. That's insane level right there.
yeah, it's set up where I showed this a month ago or more. I think we talked about it. The 886 on the monthly was, bring that up. I think yeah, right at 66. Get back here. 68 and change. So didn't even, with all the craziness with the chip sector and all the ones that did run, Intel could not manage to break out of the 2000 peak. This is it,
Headache.
yeah, it's pathetic, and it tells you a major failure of that peak. The Intel, even though it's taking its time, it's a snail of a move. Will have to come back, and this is, take a look at, we connecting dots on Intel.
Dang, what a freaking shark, right? Pretty much.
Yeah,
Like a major one, 2000.
let me go. Let me
Yeah,
go
hit
to
the 88, the double top to the 886. Oh my God.
yeah. Let me go to the weekly,
Wow.
monthly.
I
Let's
think
go to
it might be Wyckoff distribution or something going on up here then. I don't know. Because now it's like making lower highs than the double top. Like momentum is shifting to the downside.
here's Intel, and on the other platform. So first, the 886 again, just there, and it was perfect. It was 68 bucks, but
God. Yeah.
it's a shark. This is a shark by definition. All-time history going back 20 years. A 20-year shark. Start of X. There's your A point, B, C. Just a slight. I can't get that. And then up to the 886. So right there. Let me fix that. Get it on the low. Actually, the shark goes here. That No, that's right. The absolute low was 2008, which is an interesting little side fact as well, because think about 2008 and that massive decline, but it couldn't take out, nominally go through the prior low of 2000. Then you started your March on the other side. That's kind of what's happening here. Let me get the magnet on so we can get the exact. I know the it was there. It is. Bring that down. It was an exact 886. So that will morph into a 50, and
Yep.
monthly chart for the 50 minimums, folks, especially with that kind of consolidation.
$40, right?
Mm-hmm. 39, 40, and if we know that they like to overspill, so 33.
Yeah, because that's going to line up with support resistance, right? Like the peak from 2002 and 4 and 15. Yeah, I think that would make most sense. Well, you break $43, you're going to $35 probably.
Yeah, you're threatening it. We've seen what can happen. Facebook, Netflix, they've all shown us that you don't follow through. You do what Intel's doing. Intel might take more time, but you bunch up like that and you can't continue. Look out. There's Netflix, but here's Netflix. Netflix is also a shark, another shark. We could go off of 20. There's 2020, but probably even I think 2018. Same type of deal. And these all have that formation where maybe you bounce for a little bit, but for the bear market lows to be realized, you got to go and
Shoot,
hit.
man. Yeah, yeah, dude, Netflix.
So I'm absolutely hyper focused on not necessarily this rally, but the rollover. What are we going to do? We're going to roll over and fail uh, on this next move because that's for me. If we can't continue, and it should only be maybe a 2 or 3 day thing, and then it rolls over and we find ourselves here next week continuing lower, you're going to have to just say write the whole quarter off. I mean, that's where we're already we're very close to essentially saying this quarter is going to be a washout. Your monthly candles are going to be atrocious across the board. Netflix shows it. I mean,
There's still like great opportunity. Look at Ulta, man. Sorry, just you're talking about a pattern completion zone of a bearish shark. You're at the 113, and I mean probably type 2 in there somewhere. But look at the weekly. I just posted to you in Discord. Something like that, man. That's just so low risk for downside. Like buying puts, like far out puts.
yeah, and that's one of the strongest stocks in the market.
What
Minimum
Ulta?
retest for that. Yeah, I mean this is. I mean that's always been a strong trender for the last decade. But
Yeah.
look at your minimum retests are that's already showing it to you that if that shark is the top end at the 113, just come back to a 50 or come back to the 200 moving average
Yep.
uh,
292.
in this correction. So that's just the thing we have seen over and over again. We've seen it in crypto just fail, not provide any kind of real clear construction, and look at where we are now, dragging. Then we see the tech, and this is spreading out, which it normally does. That's what, again, this has got a lot of signs like the 2000 tech wreck, where the tech got hit, Dow and S&P held up relatively well, still took it on the chin, and then they eventually really got it. I mean, they really
Yeah.
took
Yeah, it
a
was like,
shot.
and that's kind of what's happening now, right? I mean, it's like the first part of the sell-off of the bear market was like all the specs, right? The speculative assets, the Kathy Woods, and what's going to drive us, on the index funds to further lower prices. It's going to be the ones that haven't rolled over yet, like Ulta, that are at their PCZs, or the bank stocks too, that have just begun too. They've just hit their tops and stuff. Then I mean, what about like the big names? Like think about Apple and Microsoft and Google. Like they haven't really done anything yet. If you're looking at the weekly, Apple's like still in its nice uptrend. It's
Apple's coming
crazy.
off a crab pattern.
Yeah, yeah, big time. Type 2 with the lower high. It reminds me of Ethereum recently with its bearish bat pattern with that lower high confirmation high, you know what I'm saying?
Yeah, and we got confirmation again 175. I still think Apple has to retest 146 in the strongest of
Hmm.
situations, and that's not a stretch. I mean, it's really not that big of a deal, especially now. I mean, we've been talking about this for a while, and even if Apple does hold up, this little move, like down to target one or even as low as target two, really will weigh on the indices. That's how you get the
Yeah,
indices lower.
market driver, yep.
So if it's Amazon's going to come down or Google needs to come down to register those levels, support levels on Nasdaq 100,
Oh
yes,
man,
so be
Microsoft
it.
looks bad.
There's
Microsoft
Google.
looks real bad.
Google's like it's like Amazon with crab pattern retesting that 1618, like a throwdown correction, and it might, look, we might bounce here for a little while, relief rally, but the longer we go sideways, and this gets just exactly to where we were with Bitcoin a few months ago, that Bitcoin could not continue. Once we violated the uptrend, it started to roll over. And the only consideration for Bitcoin and most of these parabolic jump moves is tell me what happens at the 382. 382 is about 2220 on Google. And if you violate 2220, then this whole range is at stake. And maybe not the full 886, but certainly a 50% level,
Yeah, yeah.
2000 or so.
You've confirmed. Look at Google. You have confirmed the top ascent with that second high. That's technically where traders set up a lower high. That's a confirmation of distribution locally up there. And that's and then Google or you name Microsoft. Go to daily. You could say it's some sort of scuffed head and shoulders. Neckline's 281, and you pretty much broke it. You're just rallying back above it today, but
I
I mean there
tweeted
could be
that.
bullish divergence if it
I,
pivoted, but
I tweeted that today. I really felt like here's Softy on the 4 hour Microsoft. Couple of patterns here, back to backs, but ugly stuff. Even if this is a bat, this is where the algos are showing an 886 slightly higher because of the alignments. But even if we're going to just manually connect dots like this, it still does not work out. It's ugly action at that 886 where 285 is that's your 886. Your
oh, so gross, so ugly,
Yeah,
so
and
ugly.
but the play here on Microsoft is you fail 270, then the whole again you start to then accelerate to retest the progress of this whole past segment. I mean, really from 2020, start there and tell me where the 382 is, tell me where your 50 is, and start looking at those levels. I mean, it's 382 is essentially like 270 where you are. And Microsoft and a few others are probably the ones to watch where if Microsoft starts to fall apart, the rest of the market will
Yep,
go
everything. Yep.
because you're dealing with again, we're just dealing with 10-year uptrends. And I'll say this,
Insane market caps.
insane market caps where the money's not flowing like it used to. Uh, if we're just looking at a reversion to the trend mean, you're talking $200 on Microsoft. And if it's something bigger, trend gets violated, then just step aside. It is Microsoft did this before, and Microsoft just got annihilated in the 2000 market. You go back, I go to the monthly, and I remember looking at Microsoft at like $20 all the way down here, early 2000s. Like, what's wrong with this stock? And it didn't do anything for 10 years.
Dude, yeah, it was dead.
And then we busted, after he stole.
2013-ish.
Well, I'm thinking more like this. Once, after Gates stole the Apple operating system and it did that kind of crazy run, it violated the uptrend clearly and then just went into a massive consolidation phase, which is a lot like what we're looking at here. Another month violation, 2 months. This then sets off the larger breakdown. Yeah. I mean, there's a 3 bar reversal now. You close below there. This is a big number for Microsoft, 277. You close under 277, you do have a confirmed 3 month reversal failure with your fourth taking it down. I mean, I think
Yeah.
it's real clear. There's even this static bunched up here. You've got, what is that, 7 months, 8 months of trading at 285 trying to fail.
Yeah, and if you close the weekly in like one more day, it'll be the lowest weekly candle close since July of last year.
Yeah.
Yikes.
Yeah. I just think you're seeing the breakouts in crude oil. You're seeing tech get destroyed. You see the trends getting hit pretty substantially. I feel like we're going to get the sign by the end of March. We will know the extent of this continuation. And the word, folks, that I want everyone to remember is malaise. Okay, it already seems been like a malaise for the last 2 years, but when it comes to the market, and we keep coming back here, and we keep seeing failed bullish patterns, failed support levels, even after being devastated so much, you have to realize this is a larger story being told. So when you see stuff like PayPal and Netflix and others that have fallen and won't give you any reaction on their way down, that means there's a lot more to go. And I'm just simply not even interested in it. I mentioned this on Tuesday that, part of me is thinking maybe this is a market for the first time in 12 or 13 years where the best thing is to do nothing and let it blow through. Maybe take some positions on puts, wait for market rally because we will get opportunities, but uh, longer term kind of outlook going into the rest of the year with the things that were going on even before geopolitical considerations, inflation, interest rates, inability to even get basic items is going to be a major thing that will then materialize in the indices. We haven't seen it. This is PayPal has been devastated, but we haven't really even seen it reflected commensurate in the index, the Nasdaq 100 index. So
Man, yeah, I just looking at some of these, I'm just, yeah, it lets you know, like, oh yeah, like I just posted like something like DRI. Maybe look at that, man. That's like, okay, maybe Wyckoff distribution going on below the 200-day moving average. Momentum is clearly shifted to the downside. Assets like that, when they start going down to their 50% or maybe even full resets, 886s, that's how your index funds get to much lower prices. Assets that are up like that it look like they're done. Like they're kind of done with their run and the reversal's coming.
that's Darden Restaurants, DRI.
Yeah.
Yep.
Just like Wyckoff distribution on a slightly higher high than your previous high pre-COVID.
Yep.
And you can just see, like that's what Bitcoin did very similar stuff in May or like all last year, beginning of last year, where it made the high initially, and then it up thrusted, made the highest high, then sold off, and then started regarding that first high as resistance. Like if you see that chart I posted, that 150 area is so important because you can see the high, the most recent high we just made that is substantially higher than 3 different highs we had before it. So clearly there is undeniable distribution going on, kind of subtly, but it's that up thrust back test of up thrust. That's like inverse bullish. Like if you flip this chart over, spring back test of spring at 150, and that's the buying signal. So it's like it's the short signal has already occurred on DRI. Like one could be short on this or have a protective put, and if they had a short setup, they would just have their stop loss marginally above 150 at this point, right? I mean this is pretty low risk for a short.
Yeah.
Starts going above 150, then it's probably maybe getting invalidated. But like the fact is, you are literally the reason why you be shorting this or buying puts on this is because of that actual indicator of the up thrust back test that was successful, and then the drawdown, and now you're below the 200-day moving average. So to me, it's just like ones like that will help move all the index funds lower.
Yeah, you have also a couple of nice pivot highs on that. So some of these others, any area that's pretty much not metals, fertilizer, crude oil, which even those could go through a pause period. We're looking at things that are doing reversals, if not major accelerations with the larger trend, and this is like a lot of them. This looks like Best Buy. Your Darden, your 382 on that. Again, look at that around 110 easy. So maybe if we get an update or a couple updates, I'll keep one. That's a good one because trend has already been violated. Now give me something on
Hmm.
like a 4 hour time frame that pops up, get some puts up here around 150 for a
And you'd
larger
be lucky
drop.
to get up there. You'd be so lucky to get 150 again.
It's trading 140 at the moment, but it's to get on the radar. And even your pivot highs, one prior pivot high is 149, and the high for the week
Hmm.
is 147. But that's a good idea because a lot of those have done the runs and are rolling over. Here's McDonald's, folks. Same kind of a
Oh
thing.
yeah.
And it's not going to take much more than continuation through the uptrend, which you have it this week on a lot of these. And this has been strong, but you're looking for once that closes on the week, you can look at, say, even this prior peak going back to 2019, where once you started the breakdown on McDonald's, you have a larger continuation of just like a 1618 throwdown. Again, even in these super strong long-term trends, it is quite common that you get these throwdown moves, like here off the pivot high, the October peak. Give me a correction. Throw it down. If you love McDonald's and you're looking to invest in it, well, look for it down at the
Or you're looking
1618.
to work there,
Well,
maybe.
after you're done working there, for 7.95 an hour, and you get a couple of shares, you buy them down at 220. But
Yeah.
these trend lines are going to break, and if they break and even just go sideways, it's not. It is so far from an opportunity that I am surprised that people are talking about looking for opportunities. Because of if we just look at the longer term charts, they've uncoupled. I don't want to be in a stock like this and have be aware of a major breakdown and then it do something like a minimum 382 COVID pullback or even 886 of that prior low. Wouldn't be surprising, um, because I think Facebook is showing you what is possible no matter what. I mean, that super massive market cap is not vulnerable to massive declines. So we need to really stay on top of these, and I would like to isolate some more situations that are like DRI because they have not rolled over yet. Here's Best Buy. This is one I
That one
mentioned.
got wrecked today.
Yeah, it's got a massive crab pattern up at the hop level is 108. It's a type 2. It's a real funky kind of crab, but look at where the algos are generated. There's your 1618, perfect type 1 down to target 1. So then it came back to the hop and spent almost a year. But now rolling over, and this could be another good put play. Even with today, you're down a bunch. You're at $90, but we would be shooting for target 2 at 42 based off of that pattern. And I would line that up. There's a lot of these that have um, not completely done the reversal move yet, and we're going to get this to continue. These are going to be the next kind of dominoes to fall. So that's how I'm going to look at all of this. I think I'm going to wrap it up on there. But Let's. What time should I jump over with you tonight?
Well, I mean, we should be going live around 5. I'm gonna try to anyway. I've got to pick up my car at around that time too anyway. So I would say let's shoot for like maybe 5:20 or something, 5:15, just because I'll do like the across the market stuff, like you kind of did, and
Yep.
then I'll get you on after we look at some. I'll just look at some assets and run through them.
All right, great. So it's about 6 o'clock Eastern.
Yeah,
E-
6:20. Yeah.
Most of you know, but go join with Get with Mitch Ray TA over on YouTube. I'll join Mitch tonight. We'll continue this conversation and hammer it out some more. Let's see how we close because we still have what 2+ hours, 2.5 hours till the aftermarket closes.
Biden's talking right now.
Is
Well,
he?
it looks yeah.
Let's hold on in here. Let's see what.
Market's not really moving, not yet anyway.
Let's see here.
Today, I'm authorizing additional strong sanctions and new limitations on what can be exported to Russia. This is going to impose severe cost on the Russian economy, both immediately and over time. We have purposely designed these sanctions to maximize the long-term impact on Russia and to minimize the impact on the United States and our allies. I want to be clear, the United States is not doing this alone. For months, we've been building a coalition of partners representing well more than half the global economy.
Features kind of
27 members of the
rallying.
European Union, including France, Germany, Italy, as well as the United Kingdom, Canada, Japan, Australia, New
I think
Zealand,
you got your
and many
hot
others,
mic
to
on. I
amplify
don't
the
know.
joint
Hold on.
impact of our response. I just spoke with the G7 leaders this morning, and we're in full and total agreement. We will limit Russia's ability to do business in dollars,
Oh, I can't hear
euros,
anything now.
pounds, and yen to be part of the global
Hold on one
economy.
second. Let me bring that in.
Will limit their ability to do that. We're going to stunt the ability to finance and grow the Russian military. We're going to impose major, and we're going to impair their ability to compete in high-tech 21st century economy.
Yeah, this is a
We've
zero.
already seen the impact of our actions on Russia's currency and the ruble, which
Another
earlier
zero.
today hit its
Talking
weakest
about him
level
talking.
ever in history. The Russia stock market plunged today.
Yeah, so what?
The Russian government's borrowing rates spiked by over 50%.
You can put him on your desktop. It's
Today's
coming through your
actions,
microphone, it sounds
We've
like.
now sanctioned
really? Let me
Russian
see.
banks that together hold around $1 trillion.
Yeah,
in
I
assets.
don't. I actually.
We cut off
I'm going to
Russia's
turn him
largest
off.
bank, a bank that holds more than
turn him off.
1/3 of Russia's.
Yeah, I'm not. Listen, this is where we got to separate measurements from the noise and focus on the measurements. And whatever they do, they're going to do whatever they want to do.
Yeah, and you're gonna get volatility maybe based on something he says, but it's not gonna mean anything in a few days.
Yeah,
Yeah, it's just intraday price action. You got to keep your head on a swivel, and we have to understand that looking at an index fund, they have recently, I think, after taking out your January 24th low, you've confirmed a bear market. Until you recapture your previous discernible highs, which the S&P 500 is 4,600 roughly. Until you recapture that, you're still in a bear market.
yeah. And there's going to be massive rallies, massive reversals
High
intraday.
volatility.
Yeah,
Yep.
and your 1618 there is 314. The thing from a harmonic pattern perspective, I really wish that would have hit. If
He's just rallying
1618
right
would
now.
have, we would be rocking. I think even more had that 1618 got hit. So don't be surprised. This could be a 1 day thing. Let's see where
Yep.
we finish up, and then I'm still gonna say this October 1618 is the place to be looking for the real trigger, and tell me what happens there. Then I'll really make some kind of assessments. But if we fail there, and even with this thing rallying now, just for the longer term call is you fail under that 314 on the index, it's under 12.8. Then you'll deal with the larger possibilities we alluded to today. I just think there's going to be plenty of time. The 2000 bear market took, I was like 15 months of grind before you saw something kind of concrete, constructive action. So just be aware of where we are. I think it's the trading wise, it's a great environment, but only for short term trading. So,
Hmm. Yeah,
yeah,
yeah, you
fun.
just gotta remember the trend we're in, and we just made a lower low than our previous low, and we've made lower highs than our previous highs. So we have to make a higher high than our previous high, and then a higher low than our previous low if we want to get back to business as usual. And I mean, S&P is just, I think what it's doing right now is going for a gap fill. It's about to fill the gap. I mean, on this Biden speech, like it pretty much did just fill the gap. Nike almost filled its gap. I think the Q's already did. With all the Dow Jones, did it fill its gap yet? Maybe it
Probably.
did not. It's not even close. Wow, it's a
Yeah.
way off in the Dow Jones. Dang, that's interesting.
Yeah.
Yeah, that was like head and shoulders.
And with where we've been, there's a 60 minute. Oh, Dow looks pretty good on the diamonds on the 60 minute. Um, you're right around 322. That's about 32 2000 on the index. But my concern for any patterns that it may react off of is that you get a simple type 1 reaction over the next week or whatever, and then you dump.
Hmm.
And I'll look for that. I look for, it would be another short opportunity, and then when you come back and retest, you fail, which is how the failures normally unfold. But I'm going to keep a close eye on the current this today's current rally, but the weekly close, and then the monthly close. We'll see where we are next week because that's going to tell us a great
Hmm.
deal of does it continue now or does it go maybe later in the year. From a presidential cycle, the second year, the midterm year, is frequently the worst year out of a presidential cycle. Any if it's
It's never up. It like midterm years
yeah
since 1980, you've never had a year of positive yield on the index funds, never. So if it did it this year, it would be an anomaly. It'd be the first. So,
yeah. So that's 8 more months of fun. But we'll be
yep,
here. We'll
exactly.
be here. I'll be here. You'll be here. So
No
um,
doubt.
we'll circle back with you later tonight, my friend. But thank you
Sounds
for
good.
today. Appreciate it.
Yeah, man. A lot of good stuff and more stuff to talk about, and we'll talk about it this evening.
All right. Well, thanks, crew. Thanks, chat. Thank you, Mitch. I'll see you guys tonight, everybody. Have a great day. As always, go get them. Get ready. This will be fun, but just be on your toes.
All
Until
right, talk
then,
to y'all soon.
yep.
All right.
See you tomorrow. See you tonight, Mitch, and join
Sounds
me with Mitch tonight about 6 o'clock Eastern. He'll go live. I'll tweet it out if you want to join us, and we'll have more fun. Thanks again, everybody. Have a great day, and go on Harmonic Trader. Get with our latest update for Harmonic Pattern Collection. Simply access the links here on the basic members page. Until tonight, I'll be over there with Mitch. We will be back on Monday at 11:30 on this channel. So until then, have a great one. Thanks again. See you on
God bless.
tonight or Monday. Bye.